Hi, Kritika, you can start, huh?
Yes, sir. Good morning, good evening to all the stock market enthusiasts joining us today. We are hosting this session to discuss in detail about the global jitters and their impacts on the stock markets. Today, we have with us esteemed guests on the panel to take this session. Our first guest is Mr. Prakash Pandey, who is the director of Plutus Group. With more than 18 years of market experience, Picasso has truly been an influential personality on the young minds and has been leading a vast community of investors. We extend a hearty welcome to you, sir. Mr. Manish Chokhani, Director of Enam Holdings, is one of India's most respected financial market experts with an experience of 30 plus years and have built and led multiple institutions. A qualified chartered accountant, Mr. Chokhani was one of the youngest MBAs to have graduated from London Business School. He has served on the school's international alumni board as well as on the scholarship panels. He is a founding member of the renowned Flame University. We extend a warm welcome to you, sir. Now, I invite Prakash sir to take the session forward. Over to you, Prakash sir.
Thank you, Kritika. Yeah. So, it's been totally honored to host Manish sir, Sushil Kedia ji, and maybe in some time Rohit will also join for his quick take on the market. And to be honest, normally you see me very confident and with my views and with my whatever I speak on Twitter, on whatever the social media platform we use to interact with you guys. But I am today a little nervous because one of my idols, and you can say my one of the few people I really admire, is with us, Mr. Manish sir, and thank you so much, sir, for being with us and taking out your time, precious time, to speak with us, right? So to start with, sir, I want to congratulate you for getting your call right, which you gave on Muhurat Trading Day on various media platform by saying that Nifty will not give more than 10% return in financial year 2022. So from there on, the market is almost at the same place, right? Mid cap, small cap, CNX, IT, Nifty, everything is at the same place. So what is your current take on geopolitical tension and inflation picture globally right now? Because US inflation is running at 7.5% right now. So what is your current take on that and geopolitical risk we are facing now? Please, sir.
Uh, sure. First of all, Prakash, thanks for very, very kind words. And as I
My
was
pleasure.
telling you when you asked me to join, can you hear me?
Yeah, I can hear you, sir.
Hello? Yeah, yeah. So as you know, I was chatting with you, earlier today. I
Yeah.
said I feel like how Sunil Gavaskar is being called
Mm.
to discuss how Virat Kohli and Rohit Sharma are playing. So
No, no,
y'all
sir.
are the leaders now, and y'all are
No, sir.
metaphors. So
you are the guide and you
yeah,
you
no,
are
no,
the
no.
real
So
force. Yeah, yeah,
yeah,
yeah,
so
yeah.
what I'll just try and share is, see, there are different people who have different time horizon of investing, and I know a lot of your followers are marveling at the fact. Like I believe today you had told that this on Tuesday the market will bottom out, and
Yes,
you
sir.
had said this last week when even the Russian president didn't know whether he'll withdraw on Tuesday or Wednesday.
Sorry,
But
sir, with
but
fold, with
so
folded hand, with folded hand. Yeah, yeah. I'll take this,
so
but you know how this works. Yeah,
so
yeah,
so in my case, it's like the clock which is right at least twice in the day. So it
yeah,
may be that call which you are referring to.
yeah, yeah.
But
Yeah, absolutely. That kind of
but
a call for sure. Yeah,
but it's more like uh, I come from the more fundamental school, which I was trained by, of course, Vallabhbhai and Nimishbhai.
yeah,
And they
yeah,
said if you stay focused on the company, and if
yeah,
the company does well,
yeah.
like Mr. Buffett says, in the short run, it's a voting machine, but in the long run, it's a weighing scale,
Correct.
and the weight of profits always tells. And just to give an analogy, which I think people will understand and follow, that if, for example, NM Group had thought about geopolitics and, we had even got banned by the USA in 98 when we burst the nuclear bomb, they would have sold their Infosys because of geopolitics and inflation and so on, and not created tremendous wealth. Same
Correct.
way, if you think of Rakesh ji holding on to his Titan and creating such enormous wealth, if they had thought a lot about these macro factors and volatility, then when you get something very rare and unique, then you can become a very, what I call convinced investor. And for that, you need to know that business and its rarity very well. And in a similar way, even like whatever may happen in US, that say an Amazon is a very rare business or a Google is a very rare business. So whatever happens to market, you all have followed, I presume, also Kathy Wood over there.
Yeah.
80% of her stocks may be down by 50, 60%.
Yeah.
But it doesn't mean that a Google or a Amazon has collapsed.
Correct.
So one is to have a general view of what the cycle is, the economic cycle and market cycle, which I'll share in a minute. But I think the more important view is what is it in my portfolio and the company that I own, and am I willing to part with it or I'm willing to buy it? Very much
Yeah.
like it would be if you were holding your own flat and someone
Correct.
comes and tells you कि अभी US में बहुत crisis है, आपका flat का भाव 10,000 रुपया square foot हो गया है. You are not going to sell your flat because you know it's valuable.
True that.
And
True
equally,
that.
if someone gets excited and he comes and says, now your flat is worth 2 lakh rupees a square foot, you will say, okay, I'll accommodate you. I'll give it to you today.
True
So
that.
it's that sort of period where, because we have all made unprecedented gains over the last 2 years, and
Yeah.
we know that the prices are a bit ahead of reality and the profits have to still catch up. Therefore,
Yeah.
there is this nervousness and volatility. Honestly, if the prices were low, whether Russia attacks Ukraine or doesn't attack, we wouldn't have bothered about it, right?
Absolutely
So,
agree. Yeah.
and just to put that in some context, that it's very normal in a market cycle that first the stock market goes up, anticipating what is going to happen. Then the profits follow, and
Yeah.
the economy and interest rates and inflation follows the profit cycle, because only then the central bank can put up interest rates to try and
Yeah.
slow down the economy.
True.
So while the US may be at a different stage of its cycle, where they've had tremendous profit growth in the last 10 years, and they are now facing inflation, we are only beginning our cycle, where the stock market's gone up, but company profits are yet to come in this year and the next year. We will
Yeah.
get tremendous earnings growth, and
Yeah.
market has to digest that earning, and from there we will take off. And it was in that context I had said last year that the markets have already gone up a lot.
Yeah.
Profits have to now follow in this year, which we are currently sitting in 22, 23. And once that profit comes, then we are ready for the next leg up. So that's sort of where we are now. That's how I would think. I hope that's useful to you.
Yeah. Yeah. Excellent, and that's really insightful, sir. So, sir, and the second question is, where do you see Nifty earnings in next 2 3 years? Right. So right now, we have a earning forecast of around 750 rupees, 780
Right,
rupees for FY 22-23. Right.
right, right.
So where do you see like the similar compounding of 10 to 14% kind of a run rate, or higher than that? What is your overall
Uh,
earning base case? Yeah.
yeah, so actually the earning growth is going to be much higher than I think people expect, because analysts end up following the curve. So when the earnings were going down, they were getting it wrong and we were getting earning downgrade. I think we are in
Absolutely.
an upgrade cycle now. And
Yes.
there are two reasons for that. Number one, I don't think anyone anticipated the enormous strength in metals and commodities. And
Absolutely.
for example, a Tata Steel swings so massively from a loss to a profit which exceeds the whole cement sector,
But
or a Tata Motor swings.
you saw that coming in 2020. I remember your
Sure,
call on metal. Yeah.
sure.
So I remember that. Yeah.
Right.
Yeah.
So,
Yeah. Please.
so if you think of our Nifty, see, there's banking and IT is basically half of the Nifty, and 10% is Reliance. So
Correct.
if you get these three right, 60% of what is happening in the market. There's certainly the IT sector is having the best period of the last 10 years in terms of earning. I'm not commenting, their valuations are of course pretty rich now,
Mhm.
but banking is due for a massive run, all the financials, because they are coming out of deep cleanup, and as rates also start rising, their NIMs will rise, they'll have operating leverage, so profits can explode in the banking space.
Okay.
And metals you have already seen, and I mean, metals, honestly, no one can tell you what will happen because China starts producing and shipping out, they may
Mm-hmm.
correct it because it's not like there's shortage of capacity.
Mm-hmm.
And, even the experts in metal, for example, I remember Vedanta was trying to take the company private
Mm-hmm.
and their bid was at 160 rupees.
Mm-hmm.
And if they knew what is coming, they would have probably taken it private at 220 and 240 even. And
Now
today
it's
here we are sitting at 360.
correct.
People are predicting it's going to 500. So if the owners also don't know, who are we to give a call on that? So it's that. But certainly Nifty looks. I mean, the not only Nifty but the Indian corporate sector balance sheets are in great shape. Banking sector balance sheets are in great shape.
Yeah.
And the earning explosion of operating leverage lies ahead of us. So I
Yeah.
would be very surprised if earnings don't surprise on the upside. And that's
Okay.
why the following year, one would expect that the market actually lifts off even further from here.
Hope it will help our audience a great deal, right?
Yeah.
And sir, any preference here between private and PSUs? Any preference? Not, I'm not looking for names, right? I'm not going to talk about.
Yeah. I mean,
And one important disclosure: in and Manish sir is a very serious player in the market, right? So we will not talk stock specific here because we may have me and Manish sir may have a serious position in that particular stock, and whatever stocks even we are taking names, that is for just for example purpose. Yeah,
illustrate. Yeah. And yeah,
yeah, so
and
it's a proper
absolutely.
disclose with
And
lots of pinch of salt, and we may be biased towards that sector or that particular stock or the company, right?
and like I said in the beginning, I'm,
Yeah,
like a clock. You can be right 2 times a day
yeah,
at 12
yeah.
noon and at 12 midnight. For the rest of
So
the day, you're wrong. So assume I'm wrong and go on that
no,
basis.
no, sir, that you are too humble,
So
right?
I'm
So
just sharing. I'm just
uh,
sharing how I think about it.
so that
And and
the day I'll become 1% of what you are.
not no not at all.
Yeah, so
You're yeah.
yeah,
So
yeah, so
but
you are too
see,
humble, but yeah, but again, for the disclosure purpose, right?
yeah.
Because
No, that's right.
we want to help people out here, and we
Yeah.
don't want to get ourselves in a trouble, so we are
Yeah.
talking just for the example
Absolutely.
purpose.
Yeah,
Yeah,
absolutely. And we have and
and
have
then
no business, no
yeah,
business, have no
yeah,
interest whatsoever.
yeah, yeah, yeah,
I,
yeah,
I
I know.
just invest now for myself and I'm
Yeah,
relaxed in life.
yeah, I know, and
Yeah.
yeah, yeah, yeah,
Uh,
yeah,
so, but like I said, I would expect, I mean, in the normal course, the entire banking space to do very well. And
yes,
again, depending on your risk appetite, the better run banks obviously are the private financials,
yes,
but the very very cheap, public sector banks are there, and they've all got cleaned up very massively,
yeah,
and they are available. They've even performed very well over the last year as well.
yeah,
But
yeah,
the gap
absolutely.
was so large that there is sufficient scope in all of them.
Yeah,
So
on the
again, if a country does well,
yeah,
it's very unlikely that the financial space will not follow. And like
correct,
we had them in the leadership space till the 3 years ago, 3 4 years
hmm,
ago, and then in the
absolutely,
previous cycle they didn't really participate. Like if you think HDFC or Kotak, which were the best owned banks, they didn't really perform. It was the other banks which took up leadership,
yeah,
and also extending from what you call the corporate banks to then the PSU banks. So it's like a relay race where
yeah,
different sectors will take leadership at different points. But certainly, this doesn't look like the end of this market cycle to me. So, in that context, for those who can afford to stay invested for a longer time, you shouldn't get scared out with what's going on in the rest of the world.
yeah. Thank you, sir. That's really insightful. So, guys, Manish sir is just saying if you have a time horizon of 3 to 5 years, or maybe 2 to 3 years even, right?
Right.
Banking is the one space where you can seriously allocate some money, right? So let's say you have 100 rupees, you can allocate 30-35% in banking or even up to 40%, right? And you can make serious money, and you can look for top private sector financials, start top four, right up there, right? Start with HDFC Bank, which is trading at I think around peg ratio of 1.1, which is quite cheap, as and the growth run rate is around 18-19%, and roughly
Yeah.
your price to earning and whatever the price to book is quite cheap as of now. And then similarly ICICI Bank, and in the PSU basket you may look for the valuation wise Canara Bank or Union Bank, maybe Just for the example purposes.
So Prakash, I'm not taking any names, and
So I'm just talking about the valuations. So here the valuations are quite cheap and attractive.
Right.
We don't know the targets. We don't know the downside risk. Here the valuations are
And I'm very conscious of the audience may not be people who are regular in the market. So please, first you get your asset allocation right.
Right.
Keep money aside. That assume 2 years the market doesn't open. You should not be stuck that where will I get money from, and you get panicked out at a bad day. So keep some sufficient cash. Put only that much in the market that you can afford, and within that make a difference between different sectors. So even if I know 110% if this one stock is going up, I may buy only 5 or 10% of my portfolio in that. I don't go crazy in that. So please don't go crazy on anything.
So normally what we say, like even if the promoter is your friend, don't trust him beyond a point.
Sure.
Yeah. So thank you, sir. That's really informative. One important call I want from you is you are among the top people in 2020 who called this commodity cycle or metal cycle absolutely right. I can easily recall that interview you made with CNBC, right? With I think Lata, if I remember right, and you said it about the valuation of steel stocks and other stocks, right? What is your broader take now, right? Without taking any names, what because the stock has already gone up 500-600%, right? Some of the aluminium stocks has gone up 500%. Some of the metal steel stocks has gone up 5, 6, 700%. As you said, Tata Steel and all, right? So what is your current take now, right?
See, it's very different when you're buying at half time book value and half of replacement cost.
Correct.
And like you rightly said, the prices have gone up significantly. But it's also a reality that if indeed this, China supply, which is a lot of surplus in the world, stops coming for a variety of reasons, and the fact that there's been such a big move of ESG, where people are not financing them, banks are not lending to these kind of companies to go into mining and all of that. So there is going to be some shortage of capacity, and it seems that the table, which may have been, say, for aluminum, we would have maybe taken a 1800 range, or you would have taken a $600 range for steel. The ranges only seem to have moved up, to a new plateau. So on that basis, but again, like I'm saying, please, these valuations are not certainly cheap. And commodities are such that even the owners don't know what will happen in next 3 months. So as long as you're getting a cheap commodity producer and you're betting on volume growth, and if price rise comes, then that's an extra bonus to you. But be a little, while it's a very, very bullish space in that sense, it's not crazy value, but it's not having gone up 4-5 times. It needs time to digest on move. And if you see, they've all kind of not been moving since almost December. So even while we keep reading, these prices are going up of the underlying commodity, the stock prices have not been keeping pace over the last 2 months. So just please, 3 times I'm saying, please do your own research. Consult whoever you work with to take your call then.
No, our audience, I can assure you, our audience is like, very, hardworking, and they do their, homework before investing. And we also advocate that we don't do spoon feeding. We always say,
absolutely.
You see the data, you see the numbers, and then you take your own call. So that's really insightful, sir. And what is your general advice about this new fintech and companies or consumer tech companies, like without taking any names, about the valuations and forever loss making companies? Forever loss making companies.
See, it works for very different people, and like you said, there is someone who can. How you say, they are value investors, they are growth investors, they are momentum investors, they are day traders. That's why we have a market where there's people buying and selling. And the venture capital business works on the basis that we buy 100 stocks. And 2 or 3 of them will go up 100 times, and they will take care of the losses of remaining 98. That's not the school which we came from of Warren Buffett, which says you don't want to lose money, rule number 1. And rule number 2, don't forget rule number 1. So when you're buying stocks on multiple of sales of 20, 30, 40 times, it's very hard. Like someone has, I think, put out about Twitter itself, that from the time it came public, the stock has never ever produced a return because it came out at some 50 or 60 times of its sales. and I
Oh my
believe it
God.
now sells at 4 times of its sales. So
Mm-hmm.
valuation is everything, and like I said, the weight of profit is the ultimate determinant. You can't, no one will support a indefinitely loss-making stock,
Mm-hmm.
and you need the weight of profits to come. And if you don't see that, and if you don't have that horizon of 5 or 10 years through which they are playing, then certainly it may not be the right investment for you. And I just say one thing: see, investing is like a season. So when you know there was a crisis in 2020, the
Mm-hmm.
government comes and puts a big fiscal stimulus. The central bank comes and cuts interest rates and floods liquidity. So
Mm-hmm.
that's like once in a decade or once in a lifetime you get that kind of support from the regulatory side, correct?
Correct.
And if you have bought at that time and now you expect the same support will continue forever, it's not going to happen, because now you know what lies ahead of me is rising interest rates and rising taxes and lower
Mm-hmm.
liquidity.
Mm-hmm.
So what valuation one could have got for that same company 2 years ago, you
Mm-hmm.
will not get it 2 years hence. So you know the
Absolutely.
multiples are only going to decline. They're not going to go up for these businesses. So you have to play
Ab-
on that basis, that you're basically taking a bet on explosive earnings growth. And there are not too
Absolutely.
many companies which have done 20, 30, 40% compounded earning growth for 10 years at a stretch.
Yeah.
So you can't generalize, but if you are one of those two, like I said, if you have been the Google or you have been the Amazon, that's a different category compared to, say, if you were, say, the Zoom or the Twitter. So,
Absolutely.
so again, whatever you're looking, the Zomato is very different from Nykaa, and Nykaa is very different from car trade. So I would not generalize there.
So
Each one of them has their own model, and one has to study each one and decide for yourself what value
a-
makes sense.
absolutely bang on, sir. That's really insightful. So, what kind of general advice you want to give to the people who came after COVID, in let's say after 2020, that March crash? What a kind of general advice you want to give? Like some homework, or this is the basic you need to do to survive or make some kind of a money into the stock market. General
No,
advice.
no, my general take is this, and that's why I say I feel like I'm from the era of Test cricket, and nowadays it's T20.
So,
Because
yeah.
just to put in some context, that see, valuation in our time used to be on the basis of tola and vajan of profit, and now it's becoming a lot more faith based. So there are enough
Correct.
people who believe in dollar while they are printing enough dollars, and I'm not a believer of the value of the dollar or the pound sterling, for example, which should be the currency to fall,
Mm.
whereas we seem to be accumulating it. So as long as the world is believing, and they're not saying the emperor is naked, these fellows are able to continue printing currency and holding their currency values up.
Mm.
Same way, there are enough people who believe in gold, which never produces any cash flow. But in India, we buy $75 billion of gold every year. So same way, there are enough people who have started believing in cryptocurrencies, which like the RBI governor said, it's equivalent to a tulip mania. It
Mm.
may have nothing underlying, but
Mhm.
as long as enough people believe, it's become like, if enough people believe there is Jesus Christ and enough people believe there is Bhagwan Krishna, that religion continues. So investing seems to be moving in that direction, that if
Absolutely.
enough people have faith in something,
Yeah.
it continues to go up. So I'm not used to seeing 100p stocks and multiple of sales of 60 and extending for 1, 2, 3 years at a stretch. So
Mhm.
it seems there's a younger population out there. There's a lot of easy money out there, but everything is, like I said, it's a season. So the flood
Yeah.
of liquidity which was unleashed may not always continue. And like there is summer, there will be winter, and there may be spring and autumn in between. And that's what constitutes the fun of this market. That you
Yeah.
have to play according to what you understand and understand which season you are. And to
Yeah.
use the cricket analogy, is it a seaming pitch? Is it a bouncy pitch? Is it a spinning track? You play according to that pitch. So I'll just pause at that and leave it. I know you have other speakers,
Yeah.
so let's just
So,
get back to that.
yeah, I would like to thank host you often, sir. Yeah. So, and we'll try to conduct more spaces over the period of next 3, 4, 5 months. Yeah. So, thank you
Okay.
so much, sir.
Okay.
Thank you so much from my
Thanks
bottom
so
of
much.
my heart.
Thanks
Yeah.
so much.
I
Thank.
hope Manish ji stays back. There may be a lot of questions people may have, including me.
So, sir may not take questions, right? I haven't. Yeah. So, we will take that, right?
I hope
Yeah.
Manish
Please.
ji finds some time to stay back.
No, I'm listening to you. Something
Yeah.
for
Yeah.
me to learn here.
So, Sushil Kedia is there, right? And I don't wanna waste time on introduction for him because everybody knows him. So, that's the fun part, right? And he's quite active on Twitter Spaces. So to start with, Sushil ji, right? What is your current view on markets, right? Basically, the major indices, right? Sushil ji, I hope, yeah.
Thank you
So
very much for getting me in here. It's a privilege to share a space where none less than Manish Chokhani ji is a speaker.
yeah,
I didn't wish that he stopped, and I
yeah,
wanted to continue to hear him out. He's one of the most articulate people in markets I've ever seen, and in
yeah,
fewer words, he makes greater clarity. So it was a real pleasure listening to him, and I wish he continued.
yeah,
So, with the presence of such formidable minds on this space,
yeah,
um, my submissions may be full of errors, and I'll seek your excuse beforehand. So, current is the word that rung a bell in my head when you asked this question: what is my current take?
yeah,
So, look, there has been no single war
mhm,
or an act of armed strife
mhm,
that has resulted into a continued bearish move. Forget about a bear market. In
mhm,
fact, the biggest fortunes have been made with bigger wars.
mhm,
World War One produced the House of Bangards because they kept on buying coal mines, and coal became a scarcity. And World War Two, clothing and packaging materials went into such a scarcity that Ghanshyam Das Birla, who was a jute broker and speculator, he became the largest owner of jute mills and created his first big fortune. So I'm not comparing this skirmish in Ukraine with that. But the scenario was, once United States of America has put its skin in the game that we are out to, be on the side of Ukraine, it looked
mhm,
like it's going to be a case of clear cut, armed neutrality with a lot of saber rattling.
mhm,
Because till the time there is only one guy pulling the revolver, the chance that shootout can happen is there. But when two dons are holding a gun to their forehead each, then only a misfortune of an accident will bring about the firing of bullets. But that apart, when you look at the price behavior, what did happen in the United States yields on Friday? Thursday, the demonic 7.5% inflation number came that would have spooked everyone's brains out. But the yields on Friday all closed 2 year, 5 year, 10 year, 30 year bearish. Even though I hold a view, and I'm accused of most of the time building my views ahead of the time, which is something everybody must avoid. It's too costly to take a view ahead of the time. That this long-term declining interest rate cycle world over. You check out the sovereign yields in top 20 economies. They are all on a long-term bottoming out pattern, and a long-term upcycle is coming. And the rattling oftentimes that I wrote before the times 3 months, 6 months ahead, and people would kind of get spooked on Twitter. Manishji articulated it better than anybody else. That see, if धंधा मजबूत है तो आप खर्चा बढ़ा बढ़ा के करोगे. You will take an office on a higher rent lease. You will expand your factories at a higher cost of real estate. So interest rate, the cost of capital is a rent of consuming more capital or doing business. So if there has been profligate amount of money printing to save this world from the 2020 crisis, and now that earnings are going through the roof, and the world is still not limped back to full normalcy, so it would be absolutely um, juvenile to expect that the khairat that was given when there was a crisis, khairat is the way of life. If people are able to afford better costs, that is only possible when they have a sustainably higher income outlook. So these interest rates rising and a sustainable trend in them does not deter me from saying that the highs that we have seen in most indices, clearly the fingerprint. Rohit does Iliad wave, so he'll perhaps appreciate this. For others, I'll keep the jargon minimal or as much as possible out. There was no signature or fingerprint left of any fractal at any of these highs, where one can say the long-term top is made. Point one. Then thereafter, this glide down that came. 16,400 on Nifty. Nifty terms will be much easier to appreciate for most. So I'll take that as a reference point and speak less of the levels of S&P. So 16,400 on Nifty that came. It was just one leg of a correction, W X Y X Z, or whichever way other people will label it. People can label waves in many ways. Eventually, they must all fit together at some point. And then, the rally that came into 18,200. So either it was just a connecting rebound up and we will go back and break below 16,400, or it is that the move that came from 16,400 to 18,200 and then we came down again today to 16,900 is just another connector that is going to connect the move from 16,400 to 18,200 with another one of that duration perhaps, or there may be another subdivision. So instead of trying to take through without showing the graphs the nuances of Iliad, which can be very confusing, I'll try to put it in simple terms. My perception is, and now that the today's jumbo move has come, so you don't really need brains for it. Yesterday, when we held that view, or day before we held that view, we required no brains, but we required brawn and faith. So, brawn and faith, I do not know whether they are justified in markets. But say the simpler point is, from here 18,200, and if we get out above 18,200, then 19,200, 19,600, we should be mentally open to. But say in this same leg, it does not go as far as 19,200, 19,600. We only go to 18,000 to 18,200. Broadly बात करते हैं, and then we again come back and kiss a level below 16,400. Even then, even then, the usual screams of newbie chartists. I'm not saying this in a dismissive way, but we all have to, no, not at all, not at all.
Yeah, no, but I can understand what you. Yeah, absolutely bang on. Yeah, please go ahead. Yeah, yeah.
But the problem
please.
is, in India, there is no formal regulation for technical analysis. So I tried creating a self-regulatory organization, sweating it out for 9 years, and then gave up because constitutionally I became a dodo at that organization. The president could not have carried on for more than 3 terms. So कोई और आएगा देखते हैं, मैं उसको support करूंगा. But the challenge with technical analysis is, and that is not at all derogatory, but a guy who is not good to become a chartered accountant, cost accountant, company secretary, he cannot even become a lawyer. Forget about becoming a great lawyer. Just ye regional colleges ke lawyers. A guy who does not have the tenacity to go through formal education. Let's put it this way. He may be having a very high IQ from the street smarts. And then there is no regulatory structure. So reading 2 books, हर आदमी के हाथ में ट्रेंड लाइन है आजकल, और हर आदमी के हाथ में नया नया थ्योरी है. So from those newbies, no, public needs to be guarded from that. People should be able to explain.
So I always speak about that, right?
Any good research, before it qualifies to be good research or credible research, must be first of all responsible research. Subsection 2 of Section 3 of the Code of Ethics of the CFA Institute, which all other educational bodies have adopted, including the CMT Institute that regulates technical analysis, requires subsection 2 of Section 3 of the Code of Ethics of CFA Institute requires any analyst must have a reasonable and fair professional basis for making a recommendation. So the biggest suffering of technical analysis is कुछ भी esoteric theory दो, कोई logic मत दो, बोलो मेरा black box है. So jump back to our conversation. Even if we went and broke below that 16,400 low, and where the newbie chartists, the trend followers, the religiously trend following people, अरे नया लो बन गया, मार्केट गया 14,000, 12,000, अभी तो P ratio इतना हो जाएगा, 11,000 की निफ्टी हो जाएगी. Sorry, even if that happened, I will not suspend my anticipation, not a forecast, not an expectation yet. It has to be built in pieces. Even if we went and broke below 16,400 without going past 18,200, I cannot still purely from technical patterns that we fairly feel comfortable with, will not be able to give up the idea that Nifty will not go to 19,200. That looks almost that we might achieve it some part of later this year. We cannot rule it out. And even 21,000 maybe a year down the line further cannot be ruled out. So that's on Nifty. Now the very short term. See, last whole week, the structure that the gold chart has, one would need to either beat himself up blue and black कि तू 30 साल टाइम खोटा किया है, सब टेक्निकल वेक्निकल बंद कर, सब सॉफ्टवेयर डिलीट कर, सब फेक बार. Otherwise, if gold is screaming that some miracle only can take me into an uptrend, and gold is just into a complex triangular B wave. So gold is headed down $200 from the peak seen today morning. And if we break below 1680, then even 1480 cannot be ruled out. After which, again, the uptrend on gold may revive. So assume for a moment, I'm not saying this is a gospel, this is my outlook. So assume my outlook for a moment is true or will end up coming true. Then, then so much of downside potential on gold gives me one conviction that this world is not going to rush into getting into a state of sustained risk off mindset. So today Ukraine or tomorrow another thing, and these rising interest rates. I have already discussed my take on them. That धंधा मजबूत है तो खर्चा बढ़ेगा, कोई problem नहीं है. If the interest rates would come in, see the way, if you take the implied probability of inflation expectation from gold traders, they are not expecting this inflation number of 7.5% to be a sustainable number. It's transient.
True
It
that.
will be too long to explain how do you calculate the implied probability from the bond markets. The bond market implied probability for inflation to sustain at these levels is less than 10%. So inflation is going to be there, but this kind of a spike that has come in inflation, it will get normalized. And
Yeah.
in fact, inflation is a wealth and income redistributor. Somebody saves, two people earn 100 rupees each. One guy saves 20 rupees, another guy, you know, uh, spends 10 rupees from his credit card debt. If more inflation comes, the guy who's living without savings or in negative savings, he'll get wiped out with inflation. But those who save and then those who reinvest, those are going to thrive with inflation. They cannot thrive in recession. In recessions or when prices are continuously falling in a world with growing population and continued money supply growth, only the paupers or those who are living on food stamps or doles, they should feel happy. Rest of us who have some savings also, if we save more than the rate of inflation, only then a world with inflation is good for us. So same way, companies that make profits and then they recycle it in their business growth, those are the companies that mint money. So anybody who's done a CFA course in level 2, they teach. I hope Safir and Pankaj will also join in as speakers at some point.
Yeah,
I,
yeah.
I always I
I'll
always I always lament if I miss out hearing them.
no.
So
So
they have always a
Navneet,
powerful and different perspective. I'll
Kedia,
quickly wrap up.
yeah, Kedia ji and Navneet, please send request to Safir ji and Pankaj, right?
Safir and Pankaj, if you will please consider
Yeah, sure, sir.
sending
Safir,
Sure,
out
sir.
a
Sure.
speaker request, and the
please.
co-host has agreed to add
Yeah,
you.
absolutely, absolutely, Kedia ji. The
So,
request
so
has
say
been
in
taken. Yeah,
inflation, so inflation is a wealth and income redistributor. So this out of fashion stock Hindustan Lever, whose chart I have been eyeing for more than a month, and now it's ripe as a melon. Maybe if this round it creates a firm reversal, or number of FMCG stocks, and it's not without any reason that charts get built. See, a path of only fundamentals may be a path of darkness, but a path of only technicals is a path of much greater darkness. For the
yeah,
truth, for the truth shall always be a conjecture to take a bet upon. That's what risk taking is. So the
yeah,
charts actually get built because of the fundamentals. Only problem with fundamentals is that it is very easy for a lot of merely intelligent and less than mature minds to imagine fundamentals the way that suits them. Whether the cart comes before the horse or the horse comes before the cart. So all of the FMCG charts that have been out of flavor may join the IT bandwagon. The IT stocks already made a bottom even before last week's mayhem happened. They were the first ones to make a bottom in this round. And to bet on a trend, I'm going to bet on first on the IT stocks. Say the FMCGs may become next. Selective stocks in pharma should start firing upwards. Reliance and a number of gas stocks and maybe even HPBP look good because I think crude is going to sell off like it has never sold off. From this
yeah,
95 extreme that has happened, you pick up a history for the last 20 years. You have a Bloomberg or even a trading view, open the crude chart and just click, show me all the events. The bigger the disruption that happened, either in the Suez Canal or on any seas or on any war or inside the mines, any disruptive event creates a local maxima in crude prices because all the shorts get squeezed out. In last 1 week, crude ka sub squeeze ho gaya. And then the wave patterns and the chart patterns So as the reversal is now starting to build up, if crude collapses back to 62%, $62 or 63 or 61 or even 57, we'll see. So some people will then find the refineries are having a better gross refining margin, whatever. तो अगले चलते हैं. Now even the metal stocks, I think they are into a long-term consolidation after the mind-crushing up move in stocks like Tata Steel or a sale. So I cannot take the liberty of naming people, but somebody who runs a huge amount of money fundamentally and is an extremely street smart guy, he seldom misses any piece of news. He kept on arguing with me कि मेरा सब स्टील में उड़ा देता हूँ, मतलब शांति से पकड़ के रख. You have to dampen the volatility in your portfolio. नहीं, ऑस्ट्रेलिया का पोर्ट के अंदर में कोकिंग कोल का जो हालत है, एक भी जहाज निकलेगा नहीं. अब उस पे लॉन्ग टर्म इन्वेस्टिंग कर रहे हो तो ठीक है. द चार्ट इज जस्ट कंसोलिडेटिंग. मे बी इन द इनिशियल राउंड few other sectors will take off, and 2 months later or 3 months later you'll again start seeing the steel stocks go up. So I'm not giving up on that. So that's also a factor for the long. 19,000 का निफ्टी कैसे आएगा और टाटा स्टील हो जाएगा 1800 का ना, तो 19,000 का निफ्टी भी जस्टिफाइड हो जाएगा, हो सकता है वो. Let's not rule it out. Let's not start that bet right now. But that's a clear possibility. See, more than if you were to ask me, टाटा स्टील 500 रुपया पहले घटेगा कि 500 पहले बढ़ेगा, इट्स ए नो ब्रेनर. घटे 500 घटने की जगह नहीं, 500 बढ़ने की जगह है, 800 बढ़ने की जगह. So then if we come to say autos, Maruti has in the short run become overbought and the pattern is distributive because it went ahead to manage the Nifty index or whatever, whichever way you look at it. और अगर मारुति यहाँ से 1,000 रुपया घट भी जाएगा तो 12,000 का मारुति अभी भी अपने को साल डेढ़ साल में लगता है. टाटा मोटर्स इज मेकिंग अ लॉन्ग टर्म साइडवेज मूव. 60 रुपए का बढ़ के 600 आ गया या 540 गया और उसके बाद ये साइडवेज कंसोलिडेशन दे रहा है. 60-70 रुपए का बैंड इज अ साइडवेज कंसोलिडेशन. So whether or not this time it will break out above 534 and again once more comes back to 470, eventually 700, 800, 900 कुछ भी 675 का तो फोरकास्ट एग्जिस्ट है, उसके आगे का देखेंगे. So there are lots of stocks still which किसका नंबर कब आएगा, कैसे आएगा, that's the game the market will play with us and that's our job. But that's for the stocks. Now coming quickly to crude, I've done it. Gold I've done. Interest rates I've done. Now just one quick synopsis from the currency market. Euro, which constitutes about 64% weightage on the dollar index, in real life undoubtedly is a currency. But if one were to become so ambitious in trying to build a multi-factor, multi-asset model, then only one currency will be acting as a currency, and in that model we'll have to treat euro as an asset. So for a say multi-asset model, euro will be the largest stock of any asset in the world. And that asset base, that asset, in that sense, if euro you treat mentally as an asset, has been the slowest one and the last one to bottom out. अभी तो यूरो की जो तेजी चालू होएगी, 2009 का जो बॉटम बना था, first 4 years, euro kept on galloping and it kept on pushing all assets higher. And lastly, concluding point on the dollar index, that high of 97.4 that we made 2 weeks ago, I think that's the Mount Everest for now. Maybe over the next week, I don't mind. I will not be surprised if in the next week, 10 days, we go to 94.30, whatever. That's still 200 bips lower. But the broad call is this world may get a surprise, and rightfully so. If America will continue to be an exporter of inflation for many quarters ahead, and the rest of the world will keep receiving this inflation, that's how the global trade will revive. Perhaps that's one way. That's how it might pan out. And in that scenario, it's but natural. You don't need my charts. Simply, the inflation expectations theory or the interest rate expectation theory will tell you clearly the fundamental assessment should be. If, where's the fundamental? Everybody is getting mental using fundas that suit their immediate anxiety. If on one hand, the bet is that inflation तो खतरनाक फाड़ू हो जाएगा अमेरिका में, तो डॉलर घुसना चाहिए. डॉलर घुसेगा तो एसेट्स को बढ़ाएगा. कौन सा एसेट्स को बढ़ाएगा? And now jumping quickly to the yields. Yields today are spiking up once more. And 2 nights before on a space we were arguing, इस एसेट को पकड़ो तो आप वो वाला एसेट रॉन्ग है, उस एसेट को पकड़ो तो ये रॉन्ग है. तो भैया शॉर्ट टर्म ट्रेडिंग में द गेम इज market like that the next 2-3 lines I'll conclude. Market like those who have seen the Bollywood movies of 70s. तो जीवन नाम का एक कैरेक्टर होता था, बड़े बड़े दांत और वो बड़ी सी रुमाल बांध के बड़ा रामपुरी चाकू लेके सबको डराता था. But his business in any of those roles was never to murder people. He would only come to scare by putting the Rampuriya, 14-inch Rampuriya at the jugular vein And the moment somebody will throw the wallet, he'll run away. वो भी गर्दन घुमा घुमा के देखता था कि पुलिस आए उसके पहले मैं भागूं. स्टॉक मार्केट और सारे फाइनेंशियल लीवरेज मार्केट्स यही करते हैं. वो जीवन की तरह चाकू आपकी गर्दन पे लगाएंगे. So you throw your wallet a little away. You know,
Yeah.
you place your bets in a way that when this jugular vein pressing moment comes, that came today morning, it happens almost every time. So
Mhm.
in multi asset thinking on a day to day basis, you got to realize हर मार्केट में 1970s का बॉलीवुड का वो जीवन है, जग्गू दादा. और and that market will nudge and throw weak hands out of the game in all asset classes and then finally discover their trend. So
Mhm.
bottom line for me, concluding, 18,200 or Nifty for now,
Mhm.
and we'll see if that is the point from where we'll further go to 19,200 or we come back. It's possible LIC का issue इतना पैसा suck कर लेगा system से और भी चीजें आ जाएंगी, तो let's be ready. So let's
Mhm.
call it a broad range. 16,200 से 18,200. 18,200
Mhm.
के ऊपर ब्रेकआउट अगर आ गया तो 19,200. And inflation doesn't worry me. I'm celebrating it.
So
Thanks for
excellent,
giving your attention.
excellent, Sushilji. That's really, really insightful, right? And one last question to you, right? Because a lot of people, I think I clearly remember, right? You are among the few people, right, who came on TV in 2019 December or maybe October and said the mid cap IT is ready to blast, right? And at that point of time, you made a call on e-clerks when it was, I think, trading around 400 rupees, and it's now almost like six bagger for most of us, right? So what is your call on mid cap IT, right? That,
एक मेरी प्रार्थना है भाई,
हाँ.
लग गया तो तीर वरना उड़ता तीर.
नहीं,
पुराने
कोई बात
प्रॉफिट
नहीं.
कॉल्स के
नहीं,
सेलिब्रेशन
कोई
और
बात नहीं. तो
वेलकम नहीं
अब
करते
अभी
हैं
अब
आज की तारीख में.
अभी क्या लग रहा है आपको?
अभी फॉर द
मिड कैप,
इमीडिएट होराइजन, अभी फॉर द इमीडिएट होराइजन आई एम
मिड कैप
नॉट.
आईटी में.
या अभी ऑन द इमीडिएट होराइजन आई एम नॉट रशिंग इनटू ग्रैब द मिड कैप आईटीज. अभी लार्ज कैप्स को पहले ग्रैब करेंगे, बट से इफ यू टेक अ मीडियम टर्म पर्सपेक्टिव फ्रॉम मी, ये नौकरी, जेंसार, आपका इंडिया मार्ट, शांति से कोई पकड़ के बैठेगा तो ये सब अभी भी डबल हो सकते हैं. आई मीन आई एम नॉट सेइंग दे विल गो डबल, बट शॉर्ट करेगा कोई तो हो सकता है डबल पे काटेगा. लॉन्ग करने वाला 10-12% नीचे देखने की बर्दाश्त है, तो ये अभी भी डबल होने की जगह है. 50-60% तो बढ़ ही जाएंगे.
Thank you so much, Sushil ji. Huh? Thank you. Thanks. Yeah, thank you. So, Safir ji is here with us, right? He's one of the most influential mid cap and small cap investor. So, I really want to start with him while asking him what is his take on the market, current market, right? The sell off on mid cap and small cap, and how he's seeing next 1 year from here on.
Yeah, hi, good
Safir ji.
evening, and thank you
Yeah.
so much for your lavish introduction, of which I'm not so worthy. But
No, you are. Please carry on. Yeah.
see, there is a dilemma in my mind, and I'm a perennial bull. So, considering somebody who's a perennial bull, I will always be biased in my thought process. But there is a dilemma in my mind. While it is true that the FII selling has been absorbed by the domestic buying, and that trend is extremely healthy, we must not lose fact of or we must not lose the fact that the DI, the domestic buying, has come in at a time when the equity market has seen two very good years. We have not currently familiar with the extent to which domestic buying continues if the market were to stagnate or the market were to decline, particularly having regard to the fact that the amount of easing that is being withdrawn from the system by US is unprecedented. I mean, the kind of statement that the Fed has made are unprecedented. Now, let us assume that that today had not happened and we had that nasty fall of 4% odd on the mid cap and small cap on Friday. And this was to, by a drip by drip, if this was to continue for the next few days, and, for example, I did a poll on Twitter and I found that most people are talking about, their portfolio declines of between 15 to 20% just from January. If this was to continue, I am not sure whether the domestic buying will continue, having regard to also a lot of uncertain results, because this entire supply chain issues and a lot of disruptions have already happened. So the best way to focus is not to focus again on the market. My strategy as a example would be that I agree with Sushil ji that I would continue to nibble at IT, whether it is large or medium, is a function of where you see value. Similarly, for example, I'm not a buyer in any of the new tech businesses, and you would recall that when I came on television before the new tech, I think Paytm's IPO was coming, I actually predicted that some of these stocks will go down to half, which
Yeah,
is what has
absolutely.
happened.
I can
And
recall.
so,
I
so
can
I'm not
recall.
a buyer there still. I mean, they may see bounce back, and somebody may, say that I bought it at 750 and it's become 850, 900, but this is not a secular trend right now. Traditional investing does not teach you this. And, like Manish ji rightly said, we at least I will not try to do what doesn't make sense to me. I will not buy Bitcoin if it doesn't make sense to me. So what is happening is some really quality companies are getting bashed out of the market just by one quarter result. That one quarter result is the managements are continuing to be buoyant. Some of them are just suffering from supply side issues or some raw material front issues. And if there is a significant drop because the market is brutal, then I would deploy some of my money in companies that are showing secular trends that otherwise are not likely to be disrupted over a period of time, but are at the receiving end. Now, if a stock, for example, is down 15 to 20% and I buy it and it gives me 15 to 20% for the year, which historically, last year I would have not been happy with the 15 to 20% return, but this year I would be. So my fishing basket is open for good companies that are cracking, which are cracking on just one quarter result. Of course, if it's quarter to quarter to quarter to quarter, then there could be a problem there. That is my forte, and then I still find that there are some very niche companies in the small and mid cap segment that whose entire paradigm changes because of export. They get any one credible order, their entire paradigm changes, the way of production changes, quality inputs happens, PLI happens, so many other things happen. So I'm trying to gear myself to slow down, to find a few of these companies and to nibble over a period of time, not necessarily put everything in on day one.
Yeah, thank you. That's really insightful, Safir. And what are the preferred sector, right? In terms of right, you really looking for, like, so you named some IT, mid cap IT you are looking for, and back in anything you are looking in banking or PSU private, any preference over there?
No, so in banking, it is now public that I have liked State Bank of India and ICICI for the last some time. I think I wrote in Outlook magazine on SBI at 170 rupees odd, and then I have indicated my preference, and I'm personally invested. And as a caveat, I'm not a SEBI registered advisor. I like Canara Bank, so
Yeah.
I don't need to go and find more, because if I look at three banks, effectively my basket of banking is done. My allocations here are sufficient. If State Bank, I'll just give you an example, although I may not have acted upon it yesterday. I found no reason why State Bank of India was down 5.5% yesterday. The market was confused whether it was reacting to ABG shipyards bad debts, which were already accounted for, or was it reacting to a global market, in which case, as a State Bank of India all of a sudden had given loans to Russia, or
Mm-hmm.
was financing the Ukraine war or something. It was not logical in that sense.
Mm-hmm.
And also, if you look at Twitter as an example, a lot of people are calling off the lack of rally in Bank Nifty as the defeat attitude, but they're not realizing that the Nifty's lack of rally, Bank Nifty's lack of rally, is coming in only from HDFC and Kotak. Everything else is moving, and these guys are not, they may not have performed in the last 1 year or 2 years, but there is, otherwise they're doing fine. It's not as if the Bank Nifty is strained in any way. So
Yeah.
you choose your two or three best bets. I think PSU banks are doing relatively good. These private banks, the ones that I named, are doing well. I think Axis Bank is likely to do very well. Axis Bank has cleaned up so much that
Mm-hmm.
people are looking at 5 year performance and saying it's not done anything. They're not looking at what has happened in these 5 years. So
And yeah,
that sector
Amitabh.
continues. Hanji.
Amitabh is also talking like very nice things about future prospects and all. Right, I have gone
Yeah,
through
but
their
I, I
con
I
call.
I
Yeah,
have to
yeah,
see myself as a consumer. See, if I see
yeah,
myself as a consumer, if I'm getting services out of them, if the level of credit cards, the level of banking, the level of IT usage, the level, everything is changing, then I should make a paradigm thought. It's like Peter Lynch. You should go by that experience. So according to me, the services of are improving.
hmm,
And they're also improving to a very large extent in State Bank of India. A lot of PSU banks, are coming out of that historical divide of not being very service centric, technology centric.
Mhm.
And so that's a very good sector. And export themes continue to be very, very interesting. And similarly, for example, on PLI, while there's a lot of noise on PLI and it's relatively new,
Mhm.
and I don't mean by PLI, it doesn't mean everything. Everybody thinks PLI means only Dixon. There are hundreds and hundreds of stories that will emerge in PLI. We have to look beyond Dixon and other places and find a place. And wherever
Mhm.
those opportunities are coming, it will be a great time to nibble. Similarly, in pharma, I mean, you cannot write off pharma just because it's not performed, or some of the stocks have not performed in 1 year, and some of them have. I mean, there'll be great stories there, and we should be open to. Which, firstly, we should not have a closed mind to begin with.
Mhm. Mhm. Yeah, thank you. And what kind of general advice would you like to give to the people who came into the market after this COVID, right? So the people who joined this market in last 2.5 years, what kind of general advice you wanna give to those kind of people here, right?
See, today I can sound extremely buoyant at the risk of, axing my own self, that I was one of the rare people who said in the month of April 2020, having seen a bashing of my portfolio in March 2020. I mean, I fell a lot in March 2020, but nevertheless, in April was a continuous buyer in April 2020 itself. In fact, I got a message from Mr. Vijay Kedia saying that apart from Rakesh Jhunjhunwala and me, he doesn't hear anybody bullish, and he felt both of us are mad. And I'm not to compare myself to Mr. Junjunwala, who's a legend, but I'm just trying to say sometimes it's good that you have a thought. The real point was that, see, you have to see the circumstances around you. India
Mhm.
is a market where this movement to digital, in whatever form and to whatever extent is happening, is completely a game changer. It eradicates a lot of our black economy. It enables a lot of tax collection. It enables a lot of speed of transaction. It kills a lot of middlemen, etc. This is a completely transformation of India. Let's not forget that India also has very good skills in software, which is what is enabling this. This is an in-house enabling that is happening. Let's also not forget that when the society in India accepts a paradigm shift, whether it was a shift towards automobiles, whether it was a shift towards housing, or whether it is a shift to any particular rural to urban migration, the shift is very, very large. Today, the shift to digital is a reality. I feel extremely happy when I'd go and find a person who may not be able to converse with me in English, but he's so savvy with his phone and the kind of Paytm or XYZ kind of payment. Now, see, when you look at the growth of, when you see Paytm, you have reasons whether you like it or not, and the stock has fallen. When Paytm was being listed, I said Paytm will actually cause banking to grow, because at the
Mhm.
end of it, your bank will get linked to it. The financial literacy is very, very good for players like banks, who are actually the custodians of large chunks of money, who are not intermediaries in this process.
Mhm.
So you have to find this same thing. For example, health management. I believe
Mhm.
that the health management space, even if right now somebody writes a report, I think CLSA today wrote a report on diagnostics. The
Mhm.
point is, look at the country. We are inevitably, our level of the medical penetration in the country is so low that
Mhm.
it has to become a reality. COVID will come and go. People are saying COVID will go, so the earnings of hospitals will go. The earnings of hospitals will go up, because COVID was only sort of a limited, like a ration card system for them. A lot
Absolutely
of
agree.
things, a
Yeah,
lot of
yeah, yeah.
operations are yet to happen. People were scared to go to. I think, like, if I needed to go and get my eye surgery, I would have not gone. I would have said, "Okay, I'll wait for some time," unless it was an emergency.
Yeah.
This entire medical drive, that is, and today with technology, what happens is that if you are in, say, for example, small town, where you do not have, where you literally take the size of a store, which is the equivalent of an ATM. Today, by
Mhm.
virtue of technology, a person can go there through machines. He can get his entire scanning done. He can get his medical test done. The tests are relayed to Dr. Trehan sitting in Delhi, or to Apollo Hospital sitting in Delhi. They have Zoom or similar meets. The same person is able to access that medical facility at a relatively lesser cost. It has an exponential component there. So we must try and understand. Similarly, pharmacies, we have not had. I mean, there was a debate whether they should be made legal or not legal. Pharmacy business, the moment it is becoming and you know what has happened with one MG and Tatas and others, is going to be a huge business. Amazon is going to, for example, there's a talk that Amazon will collaborate with Apollo. There's every day it comes that Apollo will do a divestment and something will happen. This will change the entire paradigm.
Absolutely. Yeah. So totally bang on. Yeah, I echo that view, right? So healthcare may do well, right? And as you said, and what is your take on auto stocks, right? So they are relatively strong as compared to the market. If you see M&M or if you see Tata Motor of the world, so
No, they are
quick take on that.
actually
Yeah,
actually
yeah.
I well, Tata Motors is maybe a different story, but they're not relatively strong to the market. What has happened is they got bashed so much that some of
Hmm.
them have bound. If you look at, I don't think Maruti has moved more than 10 or 12% from its lows. Now, of course, at a time when the market was falling, and if Maruti went relatively, you would have said, but over a long term period, of 1 or 2 years, you would have seen it's done nothing. The problem is that this disruption, and since I'm also an intellectual property lawyer, and I just for record, let me also say that I work with Tesla also.
Yeah.
The as also I work with. See, the point is, I really don't know where the technology is going to emerge from. It is not necessary. For example, Toyota may buy a startup tomorrow and may be able to convert it to Toyota, but I do not know whether that is going to happen with Toyota's front, or it is going to happen. GM is going to revive, or Ford is going to revive, or new players will come, or Ola will become bigger, or whoever. I don't know this. So I
Hmm.
can't bet. It's like when I have uncertainty of betting on the end player, I might as well bet on the intermediaries, because the
Hmm.
intermediaries are more clean. It's easier to decipher that point.
So ancillary, you are saying ancillary.
Well, it could be both ancillary, it could be charging, it could be
Yeah,
environment cleaning, it could be, so there are many players in this. There could be many
yeah,
facets of this.
yeah, yeah.
So you can play on those themes. See, let's not forget, it is inevitable. अगर 100 गाड़ियां हैं तो 100 गाड़ियां कहीं ना कहीं जाके रिप्लेस होके ई व्हीकल्स बनेंगी, चाहे वो
Absolutely
कितने टाइम में बनेंगी हमें नहीं पता.
correct.
बट प्रॉब्लम क्या है कि जो एग्जिस्टिंग कंपनी है उसको कन्वर्ट करने के लिए ऑफ इट्स व्हीकल फ्रॉम पेट्रोल और डीजल टू ई, अपने आप को ही कैनिबलाइज करना है.
Hmm.
उसको अपना ही
Absolutely,
मार्केट शेयर को शिफ्ट करना है, बट न्यू प्लेयर को तो मार्केट शेयर गेन करना है. So it's not
absolutely.
easy to decipher. I don't personally have the competence to decipher whether I'll get an auto call right. So I rather not participate, or
Yeah,
participate in peripheral things.
yeah, yeah. Thank you so much, Safir ji. Yeah, yeah, it's pleasure listening to you, and I hope you'll keep coming on our spaces and sharing your insights, whatever. Yeah,
I
thank you.
saw all these good, these great players like Mr. Chokhani, Mr.
Yeah,
Kedia, Rohit, and others who do a great job. And of course, you guys are doing great job of hosting. Then I
yeah,
just jumped in.
yeah. No, no, you are totally welcome, right? So yeah, and always welcome. Yeah. So thank you so much. Yeah. So it's now so one fundamental take from Manish sir, then Kedia ji, and then Safir on mid cap and overall nuances of mid cap, small cap investing. And then now we have another technical expert, Rohit Srivastava. You all know him, right? So no, I'm not wasting time on introduction. Rohit, you can have your short term, medium term outlook on Nifty, Bank Nifty, and that crude is crashing now. It's down 4.5%. So some take on that as well, and overall market view. Please go ahead, Rohit.
Thanks, Prakash. And
Yeah, welcome.
what I
Yeah,
would want to just highlight at the start is, getting the right mindset is a very important part of how we approach the market. And that involves looking at multiple factors that start from macro analysis. They go into behavioral science, which includes what in technicals we do by looking at Elliott waves. Then it involves looking at sentiment analysis, and then actually putting all the knowledge that you have across what I would call market analysis. I don't even like to call it purely technicals, because some understanding of what is happening in the economy or what is happening in various economic factors can actually be studied on a behavioral science level. And when you can do that, then you can actually put everything that you understand about markets every day into a singular scientific understanding of where they are and where they should head, what is the risk, and what to pay more attention to. So, what I see right now is that a lot of people get confused by the day to day news flows, and definitely the whole idea that you've risen from a 7,500 to 8,500, 18,500 can be really daunting for some people. That, should I get invested here? What if I lose money now, at this point, and it's probably too late. What gets missed out in this whole idea is being able to judge whether you're in a cyclical market, okay, or you're in a very clear-cut bull market that ends up lasting for many, many years. Once you're able to take that view, then you're able to take one step ahead from being able to think about short-term corrections or really worrying about the news flow. And then you actually look at news flow as opportunities, because when you get a lot of negative news flow, sentiment turns extremely negative. How are you supposed to react or respond to that? So when you're in a bear market, essentially what happens is that most negative news, like the ones we've been faced with, would actually lead to an overreaction or a significant reaction to the downside. But when you're in a bull market, it usually leads to a 1 day, 2 day panic sell and then quick recovery from there, which is sort of what we maybe saw happening today. So my sense, looking at what the market has done over the last 2 years, is that we are in a clear bull market. I think that's the first and most important thing to understand. And this is reflected not just because the index is at an all-time high, but because of the broad participation that we are seeing across sectors over this time period. And so it's slowly spread. What may have looked like started only with the reflation trade that I wrote about in May 2020, which is essentially backing the metals and commodity sectors, which I think will continue to be part of the bull run, but slowly spreading to the banking sector by September of that year, then spreading to the public sector stocks by October of 2020, and then eventually to real estate stocks in the last 1 year. We are now seeing participation by everything from power to capital goods and so on. So essentially what you're seeing is an across the board sector participation rally here in the market. And this is a sign of a very, very strong bull market. This is not really cyclical market that we probably saw in the interim period of the 2010s, or probably what we saw in the 1990s for almost a decade, where a couple of sectors do well, but most of the other key hardcore economy sectors actually don't end up doing well. And the indices are basically held up by those couple of sectors. So that's what we saw in these two phases. And we are sort of beyond that. Now, something else which has happened globally, which causes a lot of concern and has caused a lot of concern in the recent months, which is around the inflation and interest rate thesis. What people really need to differentiate again here between is what is inflation and what is reflation. Okay, inflation is when prices go up at the cost of something else. Okay, so you have cost of inputs going up, but prices are not going up. You have inflation without growth, which some like to call stagflation, which is a very rare event. There's only maybe one odd example of that in hundreds of years of data. And then you have cases where prices of common goods go up, but income does not. What I believe I'm witnessing over the last 2 years is that inflation is more like reflation, where price of everything is going up, and which is exactly what I think the focus of central banks has been. If you read their MMT reports and so on, because of the high debt levels around the world, is to try and inflate the debt without really getting inflation out of hand. So if that is the underlying cause, the effect is that we are seeing prices of everything go up. Input prices go up, they get passed on to output prices. And labor is also demanding higher wages, and so the price of everything is essentially moving up. And where is the best place that we really reflect all these rising prices? And the answer is the stock market. Historically, always, it's the stock market that ends up being the best bet in beating inflation. We've always been told that we should become investors in equity so that we can better inflation, and so we can get a much better rate than we'll get in a fixed deposit, which may not necessarily be able to keep pace with inflation at all points of time. And if that's the basic thesis of investing in equities, it is sort of being forgotten in all the inflation rhetoric that has been going on over the last year, that your best bet essentially was to be long equities. And so if inflation is going to be structural, then what are you going to do? Are you going to worry about it crashing the market, or are you going to take a long bet on inflation itself? And my answer is the latter. So which really brings us down to why we need to be in equities on a 5-year, 10-year time horizon. Is that we are really reflating the economy. That is one part of it. Now it will have multiple sub effects of some sectors doing well because of actual themes being there, whether it's in energy or whether it's in individual stocks, based on some of the export related projects that the government has initiated. So all of that is fine. All of that is part and parcel. But for everything to to work, what you have is an underlying bullish environment that is allowing everything to function. And so in that, the role of interest rates is essentially just one back and forth. We only end up looking at interest rates standalone if the Fed raises it once or twice. But the reality is that your real interest rates are going to be negative for a long period of time. Okay, so unless any of these factors are really shaken out of proportion, the markets are simply fast moving and discounting a lot of what is said by policymakers way in advance. For example, if we think about interest rates, the rhetoric has been going on for more than a year, and that sort of pushed up the dollar to a point where almost 90% of the traders were bullish. If you look at the daily sentiment index 10 days ago, the same scenario may soon show up even in the bond market if it continues to fall, which means you'll have interest rates reaching a low point where, the bond market reaching a low point, or interest rates reaching a high point where they've sort of discounted multiple rate hikes over the next year when we've not even done one. So what central banks are increasingly doing, as we are seeing even in India, is that they're using communication, which is also a tool of policy setting. You don't necessarily have to move rates. You just have to tell the market that this is what I'm likely to do, or this is what I'm interested in. You can tell the market that we don't want inflation expectations to go up, and the market sort of tries to adjust to that. So that's how I think most of the policy making is being done right now, because we know the risks, that if you move too fast on rates in a high debt situation, you sort of crash the system. And if you know it, and everybody knows it, it's not like common news, then most likely that's not going to happen. And most policy making, therefore, is really focused upon avoiding an overheating of the system rather than crashing the system. And that should sort of, give us a sense of how to look at market sell-offs in the near term. As and when they get exaggerated, they end up being an opportunity unless we are really crashing the system, which is most likely not the case unless proven. And so specifically in India, we are seeing we are always behind by in the long term, we are approximately behind by 8 to 10 years with the US in terms of policy. So US had its crisis in 2008-9. We had our banking crisis 7, 8, 10 years later, starting with the PSU banks, then the NBFCs into 2020, and we sort of behind that. And so similarly, we are in a phase where we are trying to stimulate our economy, and we are also in a phase where our interest rates have peaked and started to decline significantly, something that has already happened in the West in the preceding decades. And my sense is that interest rates in India, while in the short term may appear to be still pointing a little higher, not a lot, maybe 20, 30 basis points more in terms of bond yields, but eventually they're going to go much lower. If you take a 3 to 5 year perspective, then we're looking at much lower interest rates in India, which sort of would then end up justifying the higher band of valuations that we've started getting used to. So these are levels at which you'd usually get worried for a 20% correction, whereas the market may not give that if it senses that interest rates are going to remain low for a prolonged period of time, because that's one of the major factors in any valuation model. So I think that sort of puts the macro picture in place, that you're in a bull market. Then you deal with the short term and medium term accordingly. And every time you get a pullback. So when we look at the recent lows, I think we've seen all these gyrations between 18,600 to 16,400 at the lowest point. Then we've seen it come back to 16,800. And every time we are going down there, sentiment data has gotten more and more extreme. To the point where your index futures by FIs were short to the extent of 63,000 contracts, which is the highest since 30th March of 2020. Sort of shows you how extreme it really got. And so when you've reached that kind of sentimental extreme, then most probably you're in the process of reversing from there. And this data was at the end of January. We are now at the 15th of Feb, only retesting that low again yesterday, and have again bounced from there. So uh, that's my sense, that if you're in extreme negative sentiment, you're not going to go any lower, and most probably going to head higher. The next big question then becomes is whether you're going to break out beyond 18,300 right away or not. I'll always bet on the odds of it happening more than it not happening. Of course, it can always have one more round of gyration from 18,300 to 17,000 before going higher, in what some would call a triangle. But I'm sort of not anticipating that or expecting that. I will be prepared more for the upside to break, and the reason is again an intermarket analysis that many sectors are already outperforming the Nifty, which are also some of which are important to the Nifty itself, specifically banking. So banking, which was one of the most underperforming sectors of 2021, in the first month and a half has become one of the better performing sectors and also beating the Nifty itself. So sort of that's showing leadership coming back to the banking sector. So many of these sectors, whether it's banking, autos, public sector stocks, these indices, energy, are all holding much higher than the Nifty itself, which means the Nifty retracing 78% of the rally it had in Jan, whereas many of these sectors are within 50% retracement. So they're holding up much better. And so that shows sort of sense that there's strength, and moment you get a rally, those sectors are going to make higher highs. And which is why I wouldn't think that the Nifty is really going to break down once more. Once we are done with this decline, which sort of looks like today, the next rally will maybe mostly break past the 18,300, 600 range, is my sense of the situation as of now. And so things should be looking pretty much up from here in the weeks and months ahead. Thank you.
Thanks, Rohit. Yeah, it's really, really insightful. Yeah, and I hope it will help our audience to understand the context of what we are in, and and Rohit is clearly one of the bullish person along with Kedia ji right now we have. So that's great, really insightful. So what I'll do, I'll speak for 5-7 minutes on my basic screeners, right, which you can use, right, for your basically medium term kind of a trading or oblique investing, right? So my rule number one is, as Manish sir said, the liquidity environment is getting little tougher, right? So you should not buy any company which is trading above price earning multiple of 35. Rule number one. This is one of our basic screeners. Then the second rule number is the PEG ratio of that company has to be less than 3, right? Third is that interest coverage ratio, right? That it has to be greater than 3, right? And these three filters, along with I call it strong hand scan. What is strong hand scan? When the promoter plus FII plus DII holding is greater than 85%, right? You should consider that company for investing or trading. If that number is below 85, you have to be a little cautious. I'm not saying that stock will not go up. It can go up, but I generally avoid those kind of stocks. Then the company growth rate should exceed India's nominal GDP number. So the company has to grow roughly around 14% per annum. These are the 4-5 fundamental basic screener you can use to screen the stock in screener.in. And if you do that, you'll only get, right now, you'll only get 190 companies in India. So out of 6,000, only 3% of the companies will qualify under this criteria. So your universe will become smaller and smaller, and you can focus on that, right? So growth, and the fifth parameter, if you want to add, which I generally add, is return on capital employed. It has to be greater than 14-15%. So 40, if you want to keep that number little, you want to get a little higher number in terms of number of stocks, you can put that return on capital employed greater than 12%. So these are 5-6 fundamental filters you can apply. These are really actionable intelligence I'm trying to give you, right? And then what you can do is, if you are an investor, if you are an investor, try to buy companies which are holding EMA 63 days and EMA 200 on daily charts. If you are an investor for one year, up to 1 year, yeah, and if you are investing for 2 year, 3 year, 4 year, then simply avoid the daily chart and you go to a weekly chart and put that EMA 63, right? So EMA 63 line, I'm just telling you the basic stuff, because many of you don't know the basics, so I'm just going into the basic stuff you can start with, and you can save a lot of money and you can make decent amount of money. So what you can do, you can plot EMA 63 on weekly charts, and only if your time horizon is greater than 2 years, and whatever the stocks you are getting closer to EMA 63 days, along with these fundamental criteria like P less than 35, PEG less than 3, and ICR greater than 3, and return on capital employed greater than 12%, and growth rate has to be greater than 12%, right? If you are getting these setups on the fundamental sides and on the technical side, EMA 63 on the weekly charts, chances are you will significantly outperform most of the mutual funds in India if you follow my strategy. These are the back tested strategy I'm telling you. I have back tested it and I have fair evidence on this. Anybody want to see it, I can share on Twitter as well over the period of next couple of days, right? So this is the basic you can do. And for traders, now it's very, very important. First of all, the moment EMA 63 is broken on daily charts, as a trader, if you have 1 crore rupees in as your trading capital, or let's say 10 crore, you should, seriously, I'm telling you, you should not use 20% of your capital in trading. This is my rule number one. Because I have seen over the period of time, I have a fair degree of data with this also. Whenever the EMA 63, broken on the daily charts, chances are you'll see panic selling in the market. And that is very, very dangerous for FNO and leverage traders. So this is how you can avoid bigger drawdown in your life, right? So how to avoid bigger drawdown in life? I'm still repeating and very slowly. The moment you break EMA 63 on daily charts, your FNO position should go down by 80%. So if you are using 10 crores as a margin money, you should only use 2 crores. Book the loss, whatever, 30 lakhs, 50 lakhs on 10 crores you are losing, 2-3%, book the loss, or 4%, book the loss. Chances are you'll get the stock priced at much cheaper level, or either what will happen, you'll be able to save a lot of capital and you end up buying a lot of stocks at lower prices. So this is extremely useful, and I personally use for my trading. Yeah, this is my proprietary model. The moment EMA 63 gone, I am only trading with 20% of the capital. I'll tell you the live example. I predicted that the Tuesday the climax bottom will happen, and today I can easily buy 10, 20, 30,000 Nifty. The people who are aware of my size, even 1 lakh Nifty is not a big for me, right? And I bought it a very minimal quantity, 20% of my starting capital, right? So you have to understand this, despite of having almost 100% conviction, because only one system, I run normally 5 proprietary models. One of the system was in buy and rest 4 of the systems were in sell. All the positional systems were in sell. I took only 20% of my whatever the size I take. Let's say I take 20,000 Nifty, so I took only 4,000 Nifty, and I made decent money on that, and I have predicted fairly well. So, and you can, if you follow these strategies, I'm fairly confident you'll not lose big into the stock market. And the moment you stop losing, as Manish sir said, the rule number one, don't lose money, right? Right. So that is the minimum, and for that, if you follow this formula, that PEG less than price earning less than 35, PEG less than 3, ICR greater than 3, and return on capital employed greater than 12%, and your growth is around 12% minimum. It has to be greater than India's nominal GDP, right? So maybe 14-15% kind of a growth if the company is reporting. If you are investing in that company, chances are you'll not lose money. So that's it from my side, because we have still Manish sir with us. So I invite him for any closing remarks if he wanna speak on for 2 minutes. Manish sir, I hope you can hear us.
Yes, Prakash, sorry. I was listening intently to all of you and learning. So thanks for this.
Yeah,
The first time I've been on Spaces. So
yeah.
it's
Thank you so
quite
much. Yeah,
interesting for me. Thanks so
yeah,
much for having me.
yeah, yeah,
Thank you.
yeah.
And
Thank you,
thank you,
sir.
everyone. Really enjoyed listening to everyone.
Yeah.
Thank you.
So, Kedia ji, any closing remarks, please?
Okay, there could have been a number of things we could have spoken about, but I'll quickly add just two things
Yeah,
that I sort of missed speaking because I was already speaking for long. See, this interest rate worry, let's look at some hard numbers. Start of the cycle to the end of cycle, Fed increments. Fed moves incrementally. Any responsible central bank should move incrementally without giving shocks. January 77 to July 81. That's a 4-year period, 4.5-year period. S&P gave 31% positive return. Nasdaq gave 126% returns. February 83 to August 84, 1.5 years. S&P 31%, Nasdaq 13%, Sensex 13.9%. We had Sensex by then. March 88, March 89, Sensex gave a whopping 79% return in 1 year. S&P 36.5, Nasdaq 30.15. December 93 to April 95, Sensex was minus 6.4 because of the 92 scam aftermath. But in none of these regimes, there are four more such. I can rattle off all the data or I'll just post it on Twitter. Interest rate cycle increments from 1977 till now in last 50 years. In 7 of the cycles, there is a zero instance of any negative returns. And in fact, even though it will be a statistical error, but still for simplicity, let's commit that error. Sensex has given a close to 48% return during any of these incremental cycles, the 6 times we have at the instance, and S&P gave close to 27% positive returns. And this is not mindless, this is for good reasons. धंधा मजबूत है तो खर्चा बढ़ा के करेंगे. And the last only point that I wish to contribute for now, see, it's absolutely in consonance with common sense, and I'm hoping I'm not forcing my common sense on the charts I'm reading, but close to 500 odd charts that we monitor on an almost daily basis. एक बार तो देख ही लेते हैं कुछ नया हुआ कि नहीं, and others also. So almost about the 500 stocks that have reasonable quality of granularity in price movements that are worthy of watching charts. After inspecting them regularly, what I feel is going forward from here, the luxury of sector rotations, पूरा का पूरा sector चल पड़ा है, वो नहीं मिलने वाला है. It will increasingly get narrower and narrower and very very stock specific. And the common sense is simple. 7,500 पे risk became totally an ugly word. 300% implied walls, risk became a totally irreligious word. It was sacrilege to have risk. And if we are all the time keeping on still having that lurking fear, the biggest redistribution of wealth 100 लोगों ने दुनिया में मिलके मैनिपुलेट कर लिया, तो भैया अगर everybody long term stop losses लग गए portfolios पे. Some of our clients also took long term stop losses on portfolios despite saying no. And then 7,500 से 12,000 तक तो 11,000 तक तो complete movement of disbelief. 12,000 के ऊपर the liquidity surge continued. Trump lost and Biden won, and the liquidity gas pedal was hit the floor. Fed went wild after that. It was something very strange happening in the world that time. सो 18,600 जाने के बाद ये जो लास्ट 8 महीने का मूवमेंट है, somewhat correcting movement, it is only the first round when men and boys are getting separated. And I think over the next couple of years, the fight will now be markets are going to separate mature men and wise men away from only men. So, whether earnings specific, the value creation game or value unlocking some M&A transactions, some disruption across any companies specifically. So bottom line, if I were to sum it up in 2 lines, fundamentalists, your best days are just beginning. It's going to be a wildly stock pickers market, an informed man's market, a man with a deep study market. You know, and for technicians, there's a bad news. ये जो ट्रेडिशनल न्यूबीज हैं, नया हाई आ गया ले लो, और पिछला लो तोड़ दिया बेच दो. मार्केट इज गोइंग टू बी वेरी ट्रीचरस. पिछला लो टूटेगा और उसके बाद उससे ज्यादा बड़ी तेजी निकलेगी. नया हाई आएगा और उसके बाद ज्यादा बड़ा करेक्शन आ जाएगा. So within expanding volatility, expanding interest rates, now those who are going to create wealth and those who will understand where the wealth is getting created, individual stock specific इतनी wild returns अभी भी possible है. आयुष्यर की चार्ट को देखो कैसा sideways जा रहा है. I'll not go into too many stock specifics. जिस दिन फटेगा डबल हो जाएगा यहाँ से. So 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 the first leg of the party was, uh, uh, people were just getting incessantly drunk on liquidity, and there was some funny dancing on the floor. Now it's the twilight hour of the party, and where sensible ball dancing will take over. The crowd will get into drinking on the corners, or the real romance of investing, I think, is about to begin. It's not at all over.
Great, Sushil. Thank you so much. Thank you. Yeah. Safir ji, any closing remarks from your side?
Well, the only sane advice I can give to everybody is that don't get so carried away by things that you don't understand, because sometimes that also happens typically in bull markets, and it's have happened with IPO frenzy. It can happen with sectors that you don't understand. It will, you don't need to, because if the bull market remains, assuming that your thought process it remains, and assuming that it will remain for many years, you will make money in many things. So you don't look at your neighbor and what he's doing, and therefore jump into it and get this feeling of missing out. Like I said, I don't care if what where the bitcoin goes. I don't understand it, and it gives me enough peace to not buy what I don't understand, irrespective of where it goes. I Similarly, for example, if I don't understand anything in stocks, I'm not going to buy it. And if the market falls, be prepared for the fact that if you are a long term investor, talk to yourself, because I don't find it's very remarkable that when the market falls, people send me tweets like, "What is going to happen on Monday?" That's not how investing is done. I don't have no. How do you think I know what was going to happen on Monday? How do I know that what Russia will do and what the world will react and who will sell and who will buy? It's we sound sane only once we have accomplished things. When we are in the transitory process, there is a lot of pain. There is a lot of pain of patience. There's a lot of pain of deliberation. There is a lot of pain of opportunity cost. You must be weighed in your mind, and don't believe that if you are going to buy tomorrow morning just because, for example, you've turned bullish or for some price is fallen. Don't think tomorrow is going to be the best price. The best price is always a price over a period of time, because good companies compound. So wait for your opportunities and you will do very well. And that will also see. I'll give you a very simple thing in your mind. For example, you buy a stock at 600 rupees and it comes to 550, and you buy it 550 and it goes back to 575. In your mind you will feel like a winner, because although don't go by pure mathematics, the fact that you bought at 550 and you bought at 600 will all you'll get that feeling that you bought some at the base level also. A lot of your investing is just about the temperament of your mind. If you tell yourself that I will be able to survive and I will be able to respect, I will not become that wild beast, then you will do relatively better. And I have, let me tell you something, that today, while we may look whether we look good or bad as investors is secondary, but most of my learnings have come by looking at some of these legend people like Mr. Chokhani, Sanjoy Bhattacharya, and all these Prashant Jain and all that, and Vallabh Bansali and all that. Please see what they talk about. The rules never change. The market has been the same market for decades and decades and decades. The scripts change. The nature of investing has never changed. So please do not become a wild beast.
Prakash sir, your mic is off.
Rohitji, any closing remarks from you, please?
I'll just say so much that it's a great time to be in markets for everybody. And taking from Safir's comments that yeah, everybody should get themselves a little bit of education on specifically risk management,
Mm-hmm.
position sizing, because that's something that I hear about every time markets get volatile. People have issues with dealing with the way they either build a position or get into a stock, whether it's trading or investing. That basic knowledge, I think, is something that people should pick up. And apart from that, then this is a great time to be in markets, I think, from a wealth creation perspective.
Yeah, thank you, Rohitji. Yeah, thanks. So I think we are more or less done. What we can do is we can take 3 4 queries, Navneet. Yeah, we can take 3 4 queries from the audience, and
Okay, sir.
then I'll conclude. Yeah. So 3 4 queries. Or Kedia ji, you wanna add any one as a speaker?
See, there are endless things that one can, do in the markets, and they will keep changing over time. So,
Yeah.
since majority of the people are interested to always figure out abhi kya kare. So, I think
Mm-hmm.
one thing, the theme of all the HDFC names getting badgered, blue and black, मतलब बिल्कुल वो क्या कहते हैं ना, कलंकित हो गए थे.
Mm-hmm.
तो ये सारे रिबाउंड मार रहे हैं तगड़ा. एंड आई थिंक HDFC, आई एम नॉट
Mm-hmm.
टॉकिंग HDFC बैंक. I'll
Mm-hmm.
not be surprised if HDFC goes to 3200 and nobody wants to sell it that price, and then it makes a top. So that's a 35% up move. और से if pharma space has been a dog तोड़ ताड़ के नीचे बहुत टाइम से पटका हुआ है, but say Torrent Pharma starts flying up and goes up by 35%. So it's
Mm-hmm.
very stock specific, moving across sectors.
Mm-hmm.
I clearly don't see a complete sectoral move happening in almost none of the sectors. इस वक्त एक बार IT across the board, all the large caps are more or less in sync. That's one aberration. So each sector has got different opportunities. But say for the recent last week's highlight, कि HDFC was all the name HDFC was almost about to become a meme like ITC.
Mm-hmm.
मुझे लगता है बाजार पलट गया है वहां से सारे स्टॉक्स का, और वो उनको आईटीसी जैसी मीम बनाने की या मायूस होने की जरूरत नहीं है.
Mm-hmm.
HDFC will remain HDFC, and I think going forward in the next 5-10 days we'll all agree to that, the way market moves on them. So
Mm-hmm.
let's keep it at that. To give out recommendations on a space is neither professional, and it might actually harm more people, because
Yeah,
each thing is
absolutely.
right at a different time horizon. and
Yeah,
and without position sizing and risk
yeah,
management levels, these recommendations will be very frivolous and irresponsible.
yeah, absolutely. Yeah. So thank you, Kedia ji. So from my side, the closing remarks. I'm again repeating. If you are a FNO trader, right, your time will start only above 17,500, which is precisely the EMA 63 days, right? Then you can go for full Monty and you can trade big. Till the time the market is below that, you trade 20-30% of your normal trading size, and you try to trade at the best the BTST system or intraday trading system, which normally we speak on Twitter. And for investor, I think this is my personal opinion. I may go wrong. At 17,000, 16,500, this is the one of the best time to invest, right? Because I feel the India's nominal GDP will go to 13, 14%, 14% roughly thereabouts, and some of the organized player in Nifty and beyond in Nifty 200 basically they will grow at the rate of 17-18% compounding earning, right? And if the earning is exploding at the rate of 17-18%, and if you are getting those stocks in a right valuation zone, chances are you are in for a treat. As I told you 4 months back, my base, the range I told you well in advance, I think well before most of the people on Twitter, right, with all the humbleness, around 16,400 500 to 18,800. I see again this 16,400 to 19,000 will be the range, right, for next 7-8 months. And FY23 for investors will be a blowout year, basically for mid cap and small cap. I see significant upside in small cap and mid cap space in FY23, not FY22. This year will be the year of consolidation, maybe with a upward bias, bullish bias for sure. And FY23 will be the blowout year, as Sushil ji is saying. The moment Brent crude come to 55, 60, it will impact lots of mid cap companies in a positive way. So that will be margin positive for most of the mid cap and small cap companies. So most of the mid cap and small cap companies are struggling with the margin pressure and all. So I think we this is one of the best time to be a trader or investor in Indian stock market. But you have to respect the risk, you have to respect the position size, you have to follow the stop loss, and if the company is not growing more than India's nominal GDP, don't hesitate to sell that company. Don't buy fake promises. And then last hygiene principle, don't buy forever loss making companies. So these are the basic hygiene I want to tell you. And I think we have broken some serious record. So my team told me we had around 3,000 people with us. Now it's around 2,500. So, but it's still a very large number. And I request all of you to follow Safir ji, Kedia ji, Rohit ji, and Manish sir, because I follow all of them. And I seriously, whenever market go bad or something goes wrong, and if I'm not able to make any sense out of it, I really look forward to their suggestions and view on the market. So, and with this, I wish you all of you all the best, and our help, our advice is always available, right? But you have to do deep study, deep dive before investing and trading. Don't take it as a hobby, because hobby will cost you, right? Hobby will not make you money. Hobby generally cost you, right? So make it as a profession, make it as a serious business, and chances are you will make serious money out of it. So that's it. Any closing remarks, Kedia ji or Safir sir? Yeah, please. Any last two lines, please.
Dhirubhai Ambani said, "Calamity is an opportunity," and the
Yeah,
and the clearest reflection of that is every time visible in the stock markets. Whenever the fear goes to an extreme, and everybody has underowned risk, that's the time to take some measured risk. It works almost all the time, but the whole calculation, the whole game is, how to control yourselves and only take a limited risk at that spot. And when the advantage comes to your favor, like the 300-point move came, that's when scale it up. Or ab shanti se baith jane ka. That
बिल्कुल.
that 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 mindset, if one acquires, and finally how to get to do that, almost all of us are intelligent, at least sufficiently intelligent, because the stock market will not spare the buddhu. बुद्धू तो बाजार में बचता ही नहीं, वो महीने भर में आउट हो जाता है. So intellect alone is not the competitive advantage here. And if I can say that the condense of what I have unlearned in these 30 years is, जिंदगी में कहते हैं ना, दिल पे मत ले यार. स्टॉक मार्केट के अंदर में सुख से समृद्धि पाने के लिए दिमाग पे ज्यादा लोड मत ले यार. We have to reclaim our innocence, and that's what the maturity is. Otherwise, in this information age, information has become an harassment today. You don't have to get out to find out FII का क्या डेटा है और वो कौन कितना लिया, कौन कितना बेचा. सारे ब्रोकिंग हाउसेस का रिसर्च वो निमिष शाह CNBC वाला रोज ट्विटर पे लोड कर देता है. द जस्ट there's too much information chasing any intelligent man. So the wiser man will be, each of us has to choose what all we need to ignore and reclaim our innocence to make some money peacefully. That's all.
Thank you, Kedia ji. Safir sir, any closing remarks?
No, I felt
Yeah,
that you could
fine.
have you could have just left a few minutes, maybe 10 minutes out for so many viewers to ask questions, because we may have
Yeah, yeah,
expressed our Hanji,
yeah, yeah. Absolutely, we'll take few queries. Navneet, please see that if we can do that. I
Sure,
hope.
sure, sir.
People can raise their hands if they have any queries, or they can even DM the co-host and the host, or even they
Please,
can tweet
please
Market
DM,
History.
please DM co-host, and they will add you as a speaker.
Maybe whoever wants to ask a question can send a speaker request to the host and the co-host, and you can just invite them then.
Yeah, sure, sir.
Navneet, please see. Please send the request to Navneet. Huh? It's a request. Navneet or Anand, they will add you as a speaker, and then you can ask your query. Yeah.
Yes, sir.
Navneet, I hope you can see request.
Yes, sir.
Yeah, please add. Huh?
I can't see any request as of now.
No. Request is there. I think. I think it is coming to me.
Okay.
So invite, add as a speaker. Yeah, I'm doing it.
Okay, sir.
So one of our friend dare to dream. Yeah, wanna speak. Yeah, please go ahead. Yeah.
Hello, Prakash. Thank you so much for organizing this talk. A question to the technical analyst here. Uh, if you look at Dow Jones, the 150-year chart or the long-term chart, you have a trend
It's
line.
they are more or less they are macro analyst, or you can call it a complete analyst.
Yes.
None of us are here a plain technical analyst.
Yeah.
They are complete analyst. I call them complete analyst.
I follow both of them. So wanted to check with them in on the Dow Jones. The decadal chart, the where we are today is at a breakout level. So where do you see in terms of Elliott wave pattern the Dow stands today? Just an academic interest. I know it doesn't mean the short term.
Kedia ji, you wanna take a shot?
I could not understand his question. Would you please request him to ask it again?
Please repeat.
Sushilji, if you look at the Dow Jones chart of the last 100, 150 years, the trend line connecting tops, the Dow Jones is just at the breakout level, and hence probably we're seeing this volatility. Where do you see this in terms of the long-term trends on the Dow Jones?
Are you talking about connecting the long-term
top trend line
100-year chart and connecting the
Yes.
tops and then drawing a
Yeah,
trend line?
yeah.
I'm sorry to tell you, that's not how trend lines are drawn. Trend lines in an uptrend are to be drawn conservatively by connecting the bottoms. And then what happens is trend line, or for that matter, any technical approach, is just one of the things. In isolation, there are quants who have gone about dismissing technical analysis. David Aronson's seminal book, almost 1,000 pages of statistical tests. He has run statistical tests on single technical indicators or technical applications and dismissed the entire technical analysis. So on one hand, connecting the tops is absolutely wrong for checking that out as a support line. That's more like a resistance line. And secondly, in the very long run of 100 years, you rather look at stock returns, which is you should look at the chart on a log scale, which is an approximate way of looking at returns. And there's a very good reason for it. Say Nifty at 1,000, when Nifty was at 1,600 in the bottom of 2009, and today it's at 16,000. 100 points of Nifty today and 100 points of Nifty at 2009 are not the same. So when you are looking at very long-term data, a very rough and quick and ugly way to look at it is through a log scale chart. So the trend line will become very different. So trend lines do have some importance, but it's limited. And I would request you don't get obsessed with that reading. That may not be the right way to look at things.
Okay. It was on log, sir. Maybe I'll share it with separately with you. Thank you so much.
Yeah. Rohit, you wanna take a shot on this? Yeah, Rohit is not there, I think. Okay, no problem. So any more query, guys? I think I'm not able to see the query, right? I'm not very great with this technology, so maybe I'll learn next time in a better way. And then, I think I'm getting a lot of requests, but I'm not able to accept it. I don't know.
The co-host can do that, perhaps.
Navneet, you take a shot.
I'm not able to see, sir.
Okay. Any more requests, guys? Can couple of them, if they send fresh, or we can. Okay, no problem. So we end here, right? And what we can do, we can organize another Q&A session in a couple of days, right? Or maybe in a weekend, right? On a better day, Saturday or Sunday, and then we'll take the queries as well, right? So really, really insightful. And over to Kritika, right? Kritika,
Yes,
please,
sir.
yeah, please conclude.
We deeply thank our esteemed guests who took out time for us and all the views to educate and enrich our knowledge and understanding. Thank you so much, respected sirs. We thank all the stock market enthusiasts for taking out time and attending this session. We incorporated this live session to commit to our motto of providing financial literacy literally. Thank you, one and all, for joining.
A quick word of thanks from the speaker's side is in order. It's one of the more well organized, more hygienic, and definitely more productive space. So, even though Mr. Pandey, you and your
Yeah.
team can claim innocence that you guys are not so regular in organizing spaces and you'll still learn more technology.
So
But
I
I
think
think,
this is the first one we did.
but the
Yeah.
technology of excellence you guys are already practicing at Plutus
Yeah.
is very heartwarming. So, wish you many more joyous spaces, and may your ilk multiply. Thank you very much for providing this platform to all of us.
Thank you, KDAG. It's really means a lot to us, right? So we end here, but we promise you we'll keep on coming to you with with lots of experts, with lots of insights, and we'll try to help you in difficult times for sure, right? So now we have one request that Sovik Jan is there. He wanna speak, right? So another 2 minutes, guys. Please, yeah. KDAG, please stay here. Safirji also, please, yeah. Last, I think if I can add him as a speaker. Shobit, please go ahead.
Hi, am I audible?
Yeah, Shobit, please
All
go
right.
ahead.
Just wanted to check. I know we mentioned this briefly on the pharmaceutical side, but a lot of generic pharmaceutical companies like Granules, Lassa, Newland, they're all down in the dumps right now. Any views of
Mm.
how could they survive, or what kind of trend would they follow going forward?
So I think Safirji is better placed to answer this, and then I'll also try to give some insights about you. Yeah, about this sector. Yeah. Safirji, please.
See, pharma is a very tricky sector because of multiple reasons. India historically has enjoyed a lot of dominance when it came to generic pharma simply because of the fact that the world did not care so much about patents. It did not care so much about US was not so concerned about what India was doing. It was more a self-contained market, and then they had a lot of export to Africa. A lot of growth has come from Africa. Then eventually, the pharma industry went through a massive pain where right from the time of Dr. Anji Reddy to other companies, they started moving towards APIs, and they started moving towards Dr. Reddy at one point of time was doing search on a anti-diabetic molecule along with Novo Nordisk, etc. So a lot of transition has happened in these companies. Now, when this transition has happened, the stock market has got a little carried away by just hearing the word API without realizing whether the API has got potential. For example, in certain companies, it's an end-to-end product. A Dr. Reddy's, for example, may have a lot of APIs, or a DV's may have a lot of APIs, and they may have an end-to-end marketing, sort of a situation as well. Whereas some of them are only making market news and not really any, concrete findings. So what the market is doing is that the market is getting a little confused, and that is what has happened with Solara and a few other companies, and Newland and few other companies that have tanked. But if you look at the large pharma, whether it is Torrent or whether it is Dr. Reddy's or even DV's or many other names, Gland Pharma, Alchem, there are so many names that are actually showing signs of improving. The market may have reacted as a sector, and some of them may have corrected relatively lesser to the entire market, but it's more of a momentum play. So what I'm trying to tell you is that you will have to be very, very particular about understanding innovation here, because it is no longer a manufacture cheap, sell in US story. For that, many other countries including Israel and others have also come up, Tiva, etc. There's so many players around the world that are doing that. So that phase is now over.
Got it. Got it.
Yeah.
And of course,
So
if the pharma company is very strong in India, then it is a buffer for you, and that is a plus for you. For example, say Cipla. So if you see that in this entire bull market or whatever we call it, Cipla is one stock that is actually not cracked. Even when the market has fallen some 10-12%, Cipla actually
Right.
yesterday was quoting at 950 rupees. It relatively outperformed. So the point is that you have to understand the injectables segment. You have to understand the dosage segment. The dosage is not a very interesting segment. You have to understand combination drugs. You have to understand, there are multiple things you have to understand. So if you are good at understand, I do have a benefit as a person who handles international pharmaceuticals and patents, etc., to understand some of it. But look at it. The irony is that if you look at foreign, and I was reading a tweet by one of my friends only who said that the MNC pharma is underperforming. That's actually not correct. The MNC pharma outperformed a lot after the onset of COVID. What has happened is they have doled out huge amounts of dividends. If you look at some of these companies, like for example Abbott Laboratories, or you look at Sanofi, they've paid out thousand rupees of dividend in just 2 years, including extraordinary dividend. So a lot of their cash that was in the balance sheet has been sort of moved away. And during this time, a lot of the issues have come in from supply side, from distribution side, because these are strong India stories. So they may be far better players there, which when the market turns, they'll be much more profitable. A lot of them are splitting their businesses, are reorganizing their businesses. But then, as a caveat for you and others, see what has happened to Clariant yesterday. Now, if you do not expect anywhere in the world a company as credible, or at least seemingly as credible as Clarion, to admit to an accounting fraud.
Right.
So, it's not going to be an easy ride, and it's better to be very, very, very scientific in your approach and very detailed in your understanding, rather than just buy pharma just because of looking at past earnings.
Got it. Got it. Got it.
thank you. So I think done for the day, right? So we'll end here. We have gone almost like 2 hours, right? So thank you so much. Thank you everybody, and we'll see you soon again with more interesting guests, and we'll try to do justice with whatever we are trying to do. Yeah. Thank you so much.
Thank you.
Thank you, Sapirji. Thank you, Kedia
Thank you,
ji.
Pandey ji.
Thank you.